journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Sounding bad, but doing okay. I had that long session today, live trading. We had a lot of fun, made a couple bucks. This is the S&P, folks, over the last few days. Remember, I've been talking about this particular pattern on the daily for quite some time. That's this three triple tops. That's a triple top. You notice here that we've taken out the February lows, okay, and we're really close to taking out the January lows. The January lows are right here at 57.80. If that tells us that, we're going to be heading down. Right now, I think we just made a new low on the day as we speak. No, very close, but not yet. All right, that's what we're watching. I've always said that there's a chance that we could be doing this from July to August. That's that pattern that would come in down here at this level right here. Now, we take this out. Folks, stop and think now. This is a Friday, last day of the month. And everybody that bought stock here in January, look at that. Everybody that bought stock during January and February is going to have a loss. What are they going to do when they look at their statements over the weekend and say, oh my goodness, what happened here? I don't know. Anyway, intraday, I want to give you a rough idea. There's where we were yesterday. We made a 382, if you remember, had the big break. Today's rally, yes, folks, you're going to find this hard to believe, but guess what? From your high down to your low, you came within 2 ticks of the exact 382, and as you can see, we're close to taking out the low of the day here with 3 hours to go. And that's not a good sign. Looking at the Dow Jones, which was up about 300 points a little while ago. See, take a look at this. The same thing's happening here. And by the way, Stan Harley, the perennial bull, that's a joke, folks, is going to be our guest here. And here's where we are with the Dow Jones. Today's rally in the Dow Jones went to the 50% level. As you can see, we've already given back 300 points since that time and heading towards these lows down in here, which were hit overnight. And then, of course, had the rally here. And the rally was nothing more than an A, B, C, D right up here. And now we're starting. The market looks very bearish, folks. All right, now let's get on to what's really fun. Okay, let's get up here. We're going to take a look at the gold market, folks, because this gold market is a lot of fun. Hold on, I've got some stuff in here. Oh, we'll do one thing at a time. The British pounds finally started to work good. We reshorted that, if you remember. The key one, though, folks, this is the one that we had the wheat yesterday. If you remember, that wheat just didn't make it. We ended up at a break even on that at the very worst. But you'll see it opened higher by just a hair's breadth, and then it just gave up the ghost really bad, and it's coming down really hard. Remember, we bought this here at 63, and this is when we were doing the show this morning. This is when it opened. See, there's when our first trades came on, and we were trying to sell it up here at the 572 level, but we only got to 569, 570, and I said in the video overnight, I said, look, this had a little bit of a rally, so put your stop at break even now, which has been 63. There's where it would have been, and you would have been out of it, and you wouldn't have had any problem. But here's the action today in the wheat, and you can see why it's such a really fun thing to trade. It's going to be a good buy here, folks. No. That's not going to happen. Hold on here a second. No. There you see, this morning we had the 382. There's after the market broke, we could have sold that 382, but I didn't see that because we were doing other things, and that was a nice move. It's 10 cents. So that would have been, but we did too many other things, folks. We were short the euro, short the Russell, and a couple other things that worked relatively well. So anyway, that's what we're paying close attention to here today. I need to do something here, so bear with me, folks. I want to be sure that when we take out these lows that we're going to let us know. That's down about another 10 cents or so. Now we should be all right. Hold on a second. Got to put this in. Sorry. All right. Back to the gold market, folks. Said a couple weeks ago, gold has made a major high. We got some proof of that now as we come up here and take a look at this. We're going to look at the hourly chart to start off with, because remember, this is the pattern that we were watching here just the last night. Okay, now today we tried to have a buy order setting here at 42. Okay, we missed it, folks. It went to 43, and then it rallies $20 up to this level right here. So that was one that we missed by just a heartbeat. Let me get rid of some of these others. Whew, man, hold on just a second here. Besides all this, folks, I had a major plumbing problem today, which I don't do that kind of stuff very well. Anyway, this is over the last 4 or 5 days. What we're going to look at now on the gold is 4 hours, okay? There was our high up in here, folks. Look what we've done. Hello, folks. This is this week. Are you kidding me? 280. We dropped $150 in 5 trading days. Hello, operator. This is telling you there's something not right in River City. If you look at it on the daily, there was the big move. Look where we've come here. Day 1, day 2, day 3. This is going to be something like this. We said before. 1 second, folks. Need a little hot water and lemon. Okay. Stan Harley will be our guest at the break. As you can see here, we're expecting a drop like this, okay? And that's what we're expecting. And so far, we're halfway there in 1, 2, 3 days. So let's go through, play the devil's advocate. This one took about, let me see, we went down from 30th. This took, this took 2 weeks to do that, okay? 2 weeks for this one to come down. We're in the first week right now. So what we'll do is we'll measure the first week, which is right here. All right. And if it's going to do like it did before, it should do the same thing in the next 5 trading days, which would take you right down to there, right there. So if you want it from a trading standpoint, you see the big break, all you want to do now is go to that hourly chart like we were doing before, and you want to watch for a really good rally, okay? Now, so far, none of that has happened. Last night, you can see from the high we made, there was a 382 right there. Then the market comes down and then makes an A, B, C, D almost exactly to our number right here. We were waiting for 242. It got to 243. Put that point in right there. And that was 243. Both of them there. But now look, we had a rally. We're coming down again. The $64 question, is it going to hold? So this is chart information live, folks, because we're only $52. We're only $7 away from this, so we're going to watch it real closely, as I say all the time. Okay, we're going to take a little break. We're going to go to the currencies.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, I wanted to show you one of the patterns that we were doing for our live trading today. This was the euro on an 8-minute chart. We started the day right in here. This was our 9 o'clock, and we had a ABCD pattern from the low that we made right back here to the high right back there, came in right there, and we sold it right there, and we're just covering the profits right now, which is down about $500 from where we did it. We were risking $200, and so far it's working pretty nicely. As you can see here, as we're looking at this euro, you're seeing it's going to be looking at another one here, right here, there's the target right there. So just want to give you a heads up at what we're looking now. We were looking at the British pound when we were watching, but we had to pick between the British pound and the other one that is the euro. And the pound did almost exactly the same thing. Let's get it right here. We picked to do the euro because you don't want to do both. So there was the pattern that we were looking at right there. Nothing more than AB equals CD. And you'll see there's where we are, AB equals CD. And we went up to that one. And now you can see, what are we doing? AB equals CD. And that's what we're looking right now. I've been asked to train a very famous trader, his son, who's 10 years old, and he wants me to train his son to do patterns. And I said, well, hell, this is easy because a 10-year-old can pick this stuff faster than anybody. Let's look at this euro, British pound, folks. This is the one that was frustrating because if you were doing the futures, you didn't get stopped out here. They just took this out by 1 or 2 ticks, but this one went up and got our stop right there. But what we did, as I mentioned yesterday, I like to do this because what we're doing is after that top was hit yesterday, okay, there it is right back here when we hit that 27, okay, there's Thursday. I said sell that first 382 retracement, and that's what we did. So it was right there, and there it is right there, and now it's made all the money back, plus quite a bit. And as you can see, it just keeps dropping and heading lower and lower as we speak. And if we look at this on a daily basis, you'll see that we are breaking down. We're ready to take out last week's low, folks. And it's going to be a weekly reversal here in this. This is not a good sign. That's the way I'm looking at it here with this. Now we need to look also at the Japanese yen, and I've got to get to the few stocks here, but let me do the Japanese yen. That was our number one question for today, and that is right here. And you'll see here it is still having a little bit of fun. Hold on here. What happened? Oh, that's Visa. How did that get in there? Hold on, let's try it again. I know how, because it's right above there. There's what we want. And put this up, and you'll see here we got a little bit of a back off here now in the dollar versus the yen. The yen, you see, the dollar has been really strong, and this is all we're doing now. We're backing and filling. Now, watch this, folks. Remember, we always talk about the 3A2 pattern, because there's the low of the 20th. Shut the front door. And then you go to this one right here, and we're setting right at the 3A2 again. Hit it. Look at this, folks. We hit it 1, 2, 3 times this morning, and it's holding so far pretty good. But it could easily break, because we got this ABCD is completed right now. This is either a big triple bottom, or we're ready to break to the downside, one or the other. Now let's go over, talk about some stocks that we talk about all the time. We're going to take a look at Tesla here. We should be heading down, if I recall. Let's look at this on the daily, folks. We're going to 272. I think that's where it is, 272. Oh my God, it hit it. Today's low was 273. Shut the front door and raise the rent. Boy, that's interesting. Look at that. Today's low was 273. We were looking for 272 and a quarter. It's rallied $10. Wow. Maybe some of this stuff works. Yeah, there it is right there. Son of a gun. Very, very interesting. So let's move around here and see what we got here. This is heading down. And we got the Dow. These are things still dropping. Stocks look so bearish, folks. It's really hard to find any of them that looks like they're worth buying. But let's take a look now. Apple, still looking pretty strong. As I recall, it was down with a gap, and then it came right back. And hold on here just a second here. We'll go. Where are you, Mr. Appel? Sorry, folks. There we go. There's Apple. Oh, well, look at that. Had a big drop. This must have been baloney here. Apple's down $8 at one time. Let's check and see. That's most probably a bad tick. Let's just put it up on a 2-minute. And, yeah, this is a bad tick. I'm almost sure of that. Well, yeah, that has to be a bad tick, because the opening is Friday. Oh, well, I don't know. That would be one hell of a deal, folks. If it gapped down that much, if it gapped from 35 to 20, that's a $6 gap. That's why I don't do stocks, folks. I just don't have the time to do it. But looking at this, it's had a big run, has given up very little. Like I say, I don't know whether this means anything or not. Some of you smart stock people will know that. I do not know it. Now, we want to take a look at micro strategies, because we've made our profit objective in the hold on, folks. Remember we talked about the come on, MST. Here it is, right here. Remember we talked about Coinbase, and it had a profit objective of the ABCD to 80,000, and I saw it, folks, at 79,000 and change sometime this morning. Okay, now this one says we're going to go a whole lot lower than that. Now let me check to see if I can get up here, and no, I can't get any of that up here, so I gotta not worry about that. But if you'll take a look at the newsletter, you'll see that we did have a perfect 135 pattern in the cryptocurrency Bitcoin, and it measured to 80,200, and the low I'd seen earlier today was just below 80,000. I do not know where it is right now, but that's what we're watching right now. As you can see here, we're almost ready right now to take out the low of I think we just didn't we? 31.66, and this one was 31.55. So we've done that too. Now, if this doesn't hold it, we're looking like something like this coming in here on Monday. Still early in the day, so this could easily bounce back. They're going to do what they can. There's your A, B, C, D would take you down here another 400 or 500 points here in the Dow Jones, if in fact we do have to get to that level. All right, folks, and then one other stock, and we'll be up with Mr. Palantir. Palantir, I believe, had a big gap down today. Oh, not a big gap down, just a little. Oh, what? Folks, maybe this 382 and ABCD stuff actually works. We put this in yesterday, and the price objective on the ABCD was 7849, and the low today was 7849. Now, how can that be? That's the low, 7849. This says 7849, and the darn thing rallied. So wow, maybe these things actually work. All right, let me see how much time we have on the wall. Probably a little more than I expect, but we'll have Stan Harley as our guest, folks. So stay tuned, please. We'll be right back with Stan Harley.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Okay, we're back, folks, with Stan Harley, the Harley Stock Market Letter, the perennial bull market analyst. Stan, you've been bearish, and we're dropping. Where are we going, Bubba?
Larry, I think we've seen a significant market high that's probably going to stand for some time. I would be very surprised if we see 6,000 on the S&P again in quite a few years. I think the dominant trend is southbound. And I'll share with you some of my reasons why I think that's going to be the case.
Okay.
First of all, this is keeping with my theme, what I'm calling geometry of an evolving top. What have we seen so far? Well, first of all, I look at what I call the big five indices. For me, those are the Dow Jones Industrials, the Dow Jones Transports, the New York Composite, the S&P 500, and the NASDAQ Composite. And as a top unfolds, what we typically see is all five of those go to new highs. And then over a period of time, weeks, months, we start seeing one or more of those components start falling off the new high list. And that's exactly what has happened. Back in November, we saw the Dow Jones Transports peak out. At the end of November, we saw the New York Composite and its companion advanced decline line make its all-time high. On December the 4th, I was on the air with you on that day. I said, I think we're topping. That was the top in the Dow Jones Industrials. A couple of weeks later, December 16th, the NAS comp made its high. And last but not least, the S&P 500 topped out a week ago. So it's a classic evolving top from my technical eyes.
Wow. Well, you sure nailed it, buddy. And it's not only that, you held your ground when everybody else said you were 2 French fries short of a Happy Meal. And I said, no way, I've eaten McDonald's with that guy, and he's a stand-up guy. Stan, is there a question we have from one of our listeners from La Crosse, Wisconsin this morning is there a possibility of a market liquidation type crash in this type of environment?
I don't want to go out on the limb and say that. That would suggest it would be over.
You went out on a limb without a saw back in January when you said the market was topping. My God, you're in Palm Springs, California, pal. Make a prediction.
Well, I'm going to share some charts here and answer that question. So if the gentleman would just be patient, I think we might have an answer to that.
Thanks, buddy.
Let's look at the big picture here, monthly. I've shown this on the air before. This is going to be a review for some. This is a chart of the Dow Jones Industrials going back 50 years. And what I found, springing forth from the low that occurred in December of 1974, is a 150-month cycle, and it's Fibonacci perturbations. And as you can see, every one of those, every single one has coincided with a major market high in the stock market. And the analysis computes a cycle of 149.7 months, rounded to 150. And it was calling for the next high in that cycle for the Dow Jones Industrials to occur December 2024 with a standard deviation of less than 1 month. And the high, as you and I know, so far occurred in December 2024. Okay, let's stop talking about highs. Let's look at lows. Here's a chart of the S&P going back to the same time period, the last 50 years. And all of the major lows, as you can see on the chart, are punctuated by a cycle that works out to be about 82 months, just under 7 years. I've put all of the dates into this spreadsheet, done a regression analysis of the data series, and it works out to a cycle length of 82.2 months with a standard deviation of 6.8 months. And the next recurrence in that cycle is due in the vicinity of May of 2029. That's a little over 4 years from now. So the gentleman asks, are we going to have a crash? I don't know if I would call it a crash. I think this is going to be a meat grinder of a decline that's going to go down into summer of 2029. That's what I think. So we're going to go down. We're going to have sharp rallies, but the dominant trend for the next several years is going to be down in my judgment.
Okay, well, you certainly nailed it pretty good. Keep going.
What I've done here is I have inputted the monthly data points for the S&P 500 into my spreadsheet. I've done a computation of price velocity. That's basically a look back over a period of 7 months, 14 months, and 54 months, plotted all three on the same graph. And as one can see, even though price went to a higher high recently, the dots are starting to roll over. In fact, they're making lower highs. This dot right here is February of 2025. And look, it's below the prior peaks, and yet price went higher. What does that mean? It means this rally has run out of rocket fuel.
Wow.
Let's drill this down to the weekly data. And I've shared this with you and the listeners on TFNN in the past, but this is updated right through the present. What this shows in weekly counts is all of the dominant weekly highs going back to the last 25 years can be separated by the Lucas numbers, and either they're double or they're 1/2 count. So in this table over here, I've listed all the Lucas numbers between 11 and 1364. I multiplied them by 2, and I multiplied them by 1/2. And I won't go through all of them, but as one can see, every single high, plus or minus 4 weeks, has been defined by the Lucas series, or it's double, or it's 1/2 count. Every single one, 100% of them.
Wow.
Here's another cycle I found that sprang forth from the low in March of 09. And by the way, I found that cycles that produce market highs typically emanate from a major bottom. Earlier, we looked at the cycles emanating out of the December 74 low for the Dow and how it produced all of the highs. Well, let's look at the S&P. Springing forth from the March 09 low, and I've marked them with these purple vertical lines. As you can see, each one of these coincide with a major high in the S&P. That tells me that there's a cycle of about 167 weeks, and it was next due to recur the week of February 21, 2025, and the actual high so far occurred on Feb 19. Wow. Feb 19. Look how pristine that is, Larry.
Wow, it's amazing.
I've uploaded the data into the spreadsheet again, done a look back computation of price velocity. I use the term velocity because I'm an engineer by training, an aerospace engineer. Some people say rate of change. Some people use the term momentum. I don't like. I use the term price velocity as an engineer. And look, notice as the S&P has moved higher on the weekly chart, that each of these dots has made progressively lower and lower peaks. And here's where the top occurred. Look at that divergence. Oh my God. Wow. Here comes the music.
Hey, we're going to pay some bills. Thank you, Stan. Harley will be right back with us, folks. Bring your pen and pencil. The man's got game. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. Speaking with Stan Harley, the Harley Stock Market Letter. Please continue, Stan. By the way, during the break, the Dow just rallied 300 points.
Well, I'm looking at it. Yeah, it's volatile.
Not for the faint of heart.
Well, and that brings to mind a good point. We are in an era of heightened volatility, and that heightened volatility applies not only to the downside, but to the upside as well. So what we're likely to see, if my theory pans out to be true, is the stock market is generally going to head south, but the intervening rallies are going to be quite volatile. Bear market rallies tend to be more volatile than bull market rallies.
Okay.
It's a different structure. All right, we got 2 other areas that I thought we'd cover today. The first, we're going to look at home prices, and then we're going to look at Bitcoin. So let's take a look at the Case-Shiller series of home price indices. This data is uploaded on the Fred website. Everybody can get it. The most recent release of Case-Shiller data came out this Tuesday. This week, it always comes out on the last Tuesday of the month. And data is compiled at the national level, as well as 20 regional indices around the country, and as well as 10 of the largest metropolitan areas. This is a chart of the national index going back about 50 years. And what I've done on the top chart, the blue represents the monthly price bars. That's the raw data from Case-Shiller. And then I have overlaid that data with a 18-month moving average in red. And a very simple but very effective, nonetheless, buy and sell signal for real estate can be determined by looking at the monthly price bars passing either above or below the 18-month moving average. So here my mouse cursor is. Here, back in the late 90s, the monthly bars crossed above the 18-month moving average. There's your buy signal. Okay, the summer of 2006, prices topped out. Price broke below the red 18-month moving average and headed south. So we were in a bear market there until May of 2012. Then prices broke above the 18-month moving average, and we stayed in a buy signal. And technically, we are still in a buy signal until these blue dots break below the red. However, However, comma, he said, in the chart, I have taken the same data into my spreadsheet, and as I did with the stock market, I compute look-back price velocities, 8 months, 16 months, and 32 months. Plot all three on the same graph, and oh my gosh, look at the developing divergence. Here is the July 24 top, and look at this. Look at the lower peaks, and the dots are heading southbound. So that tells me we have probably seen the high in the current cycle for real estate, and prices are heading south. And it's just a matter of time that I would expect these blue monthly bars to cross below my red 18-month MA, rendering the official sell signal. And I've also uploaded the data into the Foundation for the Study of Cycles Analyzer program. I use this a lot, as you know. And that program has determined the dominant cycle in the data series is 103 months. And here you can see in blue the price plot of the Case-Shiller index. And then my little red box got got a little bit misplaced. Well, anyway, that box is supposed to be around this number 1 over here, where it says 103 months. And you can see we are past the idealized top in the waveform. And the waveform is heading south, this 103-month cycle, which has done a very, very good job over the years of defining the cyclical parameters that define home prices. Wow. We got a little bit of time. Let's take a look at Bitcoin.
Yes, we do. We got another 5 minutes. Go ahead, please.
If the music sounds, we'll take a break and then pick it up on the other side, but let's continue. Let's look at Bitcoin. I updated this just before we went on the air, and this is a log chart, and it's a log chart of the monthly data, and a couple of things very interesting here. This is all the way back to the very first day of trading, all the way through this morning, and take note of the major highs in Bitcoin. First of all, note how every time prices advance to a base power of 10, in other words, to 1, to 10, to 100, to 1,000, to 10,000, now 100,000. Every time there's been a modicum amount of overthrow, and then once it passes the terminal peak, it pulls back below that base power of 10 function. It happened here, it happened here, it happened here, it happened here, and here we are at 100,000. So my guess is when this thing ultimately tops out, and I'll get to that in a second, but I would expect a modicum amount of overthrow up above the 100,000 level, and then a pullback to below that level once again. So, okay, what's happening on the x-axis? Time. Well, note the purple vertical lines that I have drawn. The time period in months separating all of these peaks are defined by the numbers 29 and 47, which happen to be attributed to Mr. Edward Lucas, the French mathematician. Lucas numbers. Lucas numbers not only work in the stock market, they work in all markets. Yeah, they work really well in Bitcoin. But look at that. Look at the intervening peaks defined by the Lucas number series. And if we add 47 months to the November 2021 peak, we get October 2025. So what am I saying? I'm suggesting that Bitcoin is going to get up beyond the 100,000. I know it's about 80 right now. It's backing off a little bit. It's doing a little structural retrace on the south side of 100,000. But come October, I think we're going to be well north of 100,000. Not to 1 million, no, but somewhere up in this region where my mouse is, just like we did here, just like we did here, and just like we did here, something akin. So up in this region.
Totally awesome. Oh, Stan, we have a question for one of our listeners.
Yeah.
Do you use a particular cycle program, or do you do all the work by hand, or do your own computer stuff?
Well, both. I do both. I look visually, and I have some tools on my computers that I use to assess cyclical functions. And then I also know from having done this stuff for decades that cycles tend to be a function of Fibonacci or Lucas numbers. So I look for that. And that helps me. And then I also use this tool developed by the Foundation for the Study of Cycles. Their analyzer program is the jewel. The jewel. On the screen here, I have uploaded the daily data for Bitcoin. And for months now, it has calculated the dominant cycle in Bitcoin to be 129 calendar days. Oh, wow. There's the music.
That's it. Hey, buddy, thanks for joining us. Stan Harley, the Harley Stock Market Letter. We'll see you on the next uptick. Hopefully not until end of July. Thanks, Stan. God bless you, buddy.
My pleasure.
You bet. See you later, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I've been asked to take a look at copper. You see we've gone from 467, dropped 16 cents this week. If we look at this on the hourly chart, you'll see that you get some really nice patterns lined up. We're heading down, looks to this level right here. Now, we had a rally here earlier in the morning, but it did not even make the 382 of the move. You can see here it missed it by a penny. It got as high as a 50. Oh, it missed it by 3/4 of a cent, which is roughly $300. And then, of course, it's headed down. But there's the area where it's going to, would be my guess. And if you look at this on a very, very short time frame, you'll see from your low early this morning, the big drop, And then coming into the close or early Monday, we're going to be looking at that level right here, which is the ABCD over the last 5 days in the copper market. Okay, that's about it. Now, we're going to have Bill Cerubi on next week in March. It was always a lot of fun to talk to Bill. And we're also going to have Jeff Huge coming up next week also. But we want to thank our good friend, Stan Harley, for being on the guest. He's done a wonderful job here for us at TFNN, and we certainly appreciate it. Sorry for my voice, folks. It's been a long day and a long night. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side on Monday, and do something nice for your neighbors, folks, because everybody needs a little help. And I need a voice coach. So we'll see you tomorrow, or Monday. That's where we're going to be seeing you. So may God bless.